Gautam Trivedi is co-founder and managing partner at Nepean Capital. He's joining us now. He's also someone who watches the global action pretty closely. Gautam, good to have you with us here. Thanks very much. Are we at a moment where things are starting to pull back, cool down a little bit globally? Seems to be the case, although here in India, we've been insulated from the worst of it. The Nifty is down just about a little over 2.5% from its highs. In the US, on the NASDAQ, it's about a 10% cut now.
Yeah, I think one thing you got to keep in mind, and I've said this before on your channel, is that this is not an India rally alone. This is a global equity markets rally. So you've seen the Nikkei hit a lifetime high, the DAX hit a lifetime high, the Francis CAC has hit a lifetime high, the US markets are near lifetime highs, and of course, as is the Nifty. So we're not alone in that global equity rally. The other thing to keep in mind is that the correction which has begun, as you said rightly, it started off from the US. And if I look at the absolute numbers, the US clearly, the S&P 500, for example, is down almost 3% this month alone, whereas we are not down as much, but actually still up, and the Nifty 50 still up 1.6% as of yesterday's close. But I think the sell down, which has started from the West, will hit the Indian equity markets. And if you look at the absolute FII numbers, $1.5 billion this month alone of selling. But again, that fails in comparison to the $19 to $20 billion that we've seen since April of this year coming into India from foreigners. So I think some of that correction is required. I'll be actually a very happy person if that were to happen, because some of the stocks in general are very, very expensive. India is now officially the most expensive market in the world. So I think if you've got the MSCI India trading at 20 times and you've got the S&P 500 at 17.5 times, then if you're a US investor, you would think twice about putting incrementally more money to work in India. And that's exactly what we're seeing this month.
Okay. So if there is incremental money that's coming into India, we have a couple of big events upon us, right? There's, of course, the general elections coming up. And if you go by history, in every election year, the market has either in the run-up to the election year or post-election year done pretty well. Is that what you're expecting this time around as well? And in the anticipation of the markets doing well, where do you think one should pump their money?
I think, yes, I agree with what you said. Historically, that's happened. The fact there is, and the question is that I've been asked all the time. I was in Hong Kong 2 weeks ago. And the two markets that were clearly in focus of all my ex-colleagues who are now fund managers at various firms that I connected with said the two markets that they are focusing on are Japan and India in Asia. So, but having said that, the one key risk that everyone is asking me, and you and I, nobody has an answer to this, is will Prime Minister Modi get a third term? If that were to happen, I think India has a breakout moment. If it doesn't happen, I think there will be, I suspect, about 2 or 3 days of a massive buying opportunity. But what's going to be the outcome at this point and how that's going to impact the markets, it's really hard to tell.
All right. Hi, Gautam. Good morning.
Hi.
I want to discuss about a lot of stocks about you. I recall you told us the last time around as well. You believe that the mid-cap space has run a little bit ahead of itself. So I guess you're holding that view even now. So tell us about that. How would you approach the mid-cap and the small-cap space? And we'll take the conversation forward.
Sure. Now, if I look at the universe of the BSE 500 stocks, 450 stocks are up 20% or more from their respective 52-week highs. And that compares to the Nifty, which is up 19% from its respective 52-week high. So that gives you a sense of how broad-based this rally's been. It's not been limited to a handful of stocks, which is the good news. The other thing which I noticed in April of this year, of the universe of BSE 500, 300 stocks were down 20% or more in April of this year from their respective 52-week highs. Today, that number is only 70. So that's the kind of rally that we've seen that's been so broad-based, not to mention the fact that over the past about 2 years, we've seen another about 75 to 80 stocks having their IPOs and getting listed, and a lot of them have done extremely well. So I think from that standpoint, the rally in the broader market, even if you were to look at the Nifty 500 year to date, it's up 11.5% versus the Nifty 50, which is up 7.5% in rupee terms. So I think this rally clearly has been broad-based. And while optically the Nifty 50 does look expensive, or the MSCI India, they both look expensive, there are enough stocks that haven't joined the rally, and potentially, if this correction is a minor correction, which I think it is, I think some of these underperformers should basically start to see traction.
One of the biggest underperformers, Gautam, has been HDFC Bank. Valuation-wise, it's looking good. The recent presentation as well as analysts made, that's what made the street even more nervous. But it's holding at crucial technical levels and fundamentally as well is looking up, right? 2.5 times price to book near term. I mean, if you look at it on 2025, 2.1, 2.2 times. Your view on HDFC Bank, is it presenting an entry opportunity or would you get in at a lower price if you do get that chance?
I think it's presenting an entry opportunity. Who would have thought HDFC Bank would trade at 2.5 times when it's historically been at anywhere from 3.8 to 4.5 times 1 year forward price to book? Must tell you that we own the stock in our portfolio, but yes, we are bullish on that company. I don't see the stock necessarily having a huge outperformance within the next 6 to 9 months. But I think after that, from a long-term perspective, it will certainly do well as the synergies of the merger start to kick in.
We were just having this discussion with another analyst on how consumption patterns are expected to surge now that we have a big event upon us, which is the World Cup, right? Do you believe that this is a structural story, whether it's hotels have, of course, done very well up until now, but some of these platform companies like Zomato, some of these beverage companies, United Breweries, United Spirits, etc. Do you like this entire theme?
I think the theme is good. More Indians are waking up to, the ability to order stuff online and the convenience of their homes. So that's clearly a good sign. How it's going to impact revenues, we haven't really looked into that. And I think the World Cup, of course, is there for 3 to 4 weeks. And I guess after that, the question is what happens after that, whether it's hotels in Ahmedabad, which are going at whatever, $500 a night. That's a temporary phenomenon, and I think we got to look at what the medium to longer term impact of these businesses are going to be.
Gautam, sorry, just to get that near term out of the way, you think your base case is this is going to be a short-lived correction overall, right? And
yes. Sorry, but that is our base case correction because the absolute fund flow in the system globally is still so strong. We don't see any significant signs of a slowdown. If you look at just even in India, even the fact that interest rates have gone up as high as they have. I mean, today you're getting AAA rated NCDs anywhere from yielding pre-tax 8.5% to 10%. In spite of that, the money that's coming into the equity markets from domestic investors, it's unabated. It just continues. So I think as a result, I don't see that much of a significant correction coming into the market, unless, of course, something very significant externally happens. But I don't see any domestic factors in the near term over the next about 8 to 9 months impacting the equity markets negatively.
Okay, how do you position yourself, Gautam? In the past, you've given us your breakup between fixed income, equities, as well as real estate. At this juncture, what would it be? If you're allocating money, how much of it would go to each of these asset classes?
Yeah, I think, when I look at real estate as an asset class from an investor's perspective, and I talk to the real estate developers, I still haven't seen evidence of investing coming back into the real estate sector. A lot of it, for the most part, is real demand, as in people wanting to buy a home and move into it versus buying 2 homes or 3 homes and hoping to flip it once the project's complete. So I think it's still real demand-led. It's not so much investor-led from a real estate perspective. But I think if you're cautious, given how expensive the markets become, and as I said, I hope there is that correction and it remains minor. I think getting positioned in some sort of cash for that correction and then buying into that correction, I think would be ideal. That's the way I would position it.
Okay, this entire consumer durable space is a space that interests you now. Of course, valuations are a bit, expensive here, but in this whole consumption theme, is consumer durable something you like?
I think the way to look at this is, and I think the return of real estate, residential real estate, after a span of, I guess, about almost 8 to 9 years, I think is a big driver of a lot of other businesses. if you look at the white goods, I mean, when you move into a new house, you need a new refrigerator, a new microwave machine, washing machine, etc. You need lights, fans. You need, what's behind the wall. So a lot of that, I think, is being driven primarily by people buying new homes, having made money either in the stock market or in their existing businesses, and basically that also is to some extent also incrementally driving consumption of automobiles. So I think a lot of these businesses actually positively benefiting from the surge in real estate demand.
All right, Gautam, we'll leave it at that. Thanks a lot for joining in and giving us your views on a whole host of sectors and on the market.